Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the March 26th terrific Thursday, Hour 2 edition of the Trader's Edge. I'm your host, Steve Rhodes, and hopefully you are off to a fantastic start of your day, even though it is terrific Thursday. Let's make sure that you and I have an extraordinary day. Of course, the easiest way to do that is to always remember that what's talked about is a dream, what's envisioned is exciting. Of course, what's planned becomes possible, what's scheduled is real. And I want to thank you for scheduling your time with me here this morning. I'm absolutely here to serve you. So feel free to dial on in at 877-927-6648. Or internationally, you can call in at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. So don't call in for me. Don't call in for yourself. Instead of random act of kindness, do it for somebody else. That's the way to kickstart your day. That's the way to kickstart every day, especially terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, Dow's off 123, S&P is down 14, trading at 2,047. Composite off 47 points, Russell down 7. DAX off 188, FTSE down 101 points, gold's up $6, silver's up 1 penny as we speak right now. Light sweet crude is up $1. We'll go take a look at light sweet crude. Haven't done that here for a bit. Now, if you caught the first hour of the show, we're taking a look at key levels inside that. We're looking at the 30-minute charts we focused on the ES Mini. Now what I'm going to do is I'm going to switch over for this hour. We'll go focus on the Dow chart out here. So the Dow's off 121. We want to take a look at the 30-minute chart here for the Dow, and we'll put that up on the screen. And the reason that we want to be paying attention to that, really a couple of fold. Number one, there's that potential there's that seventh wave pattern that it made to the downside. Oftentimes an area where a reversal can form. That says that low that took place at 5:30 a.m. this morning. That low, by the way, is 17,465. Is really a key level to be watching. You don't even want to see it being pierced by a buck out there. So 17,465. What we also know is that if we take a look at these market profiles, and I'm having you focus on really the red horizontal lines going across my screen out here, that we haven't seen, and those are areas of resistance. We haven't seen the Dow futures break above an area of resistance since last Friday. Otherwise, those levels have acted as resistance areas out here. In fact, inside the Dow, even more so than what we saw inside. I guess there was also that same bit of time period here between about 4:30 in the morning and 6:30 or so in the morning, and this was back on March 25th. Otherwise, these red lines, they have been red lines. They've been red lines for you and I to focus on. And we saw the initial bounce. Now, the way that this is set up here, the Dow futures on the 30-minute chart, the way that this is set up on the 30-minute chart is that the buyers, the bulls, believe it or not, are the ones that are in control of this little segment, this segment between 17,481 and 17,580. That 100-point segment is actually the buyers that are in control. Now, when you see it close below that, if you were to see it close below that level, that just tells you how strong actually the selling is, how intense the selling is, because they've been able to overcome buyers. And that really took place right out here. If you take a look at, you can't really say that. I'm looking back at about 5 o'clock in the evening yesterday. You can't really say that because price never got above that level. But so we know what the key areas to be watching are. If we're to see it close above 17,580 on any 30-minute basis, that's going to have to make you say, something to think about. Now, of course, you always like to see one additional bar, one ping, Vasily, right? Isn't that from The Hunt for Red October out there? Well, that was a great movie, was it not? Of course, what Sean Connery movie is not a great movie out there? Hey, you know that, did you guys catch that Saturday Night Live? Was it the 30-year reunion, 50-year reunion? Can't be 50 years. It was probably the 30-year reunion or something like that out there. That was a great show, was it not? But how about the character that played Sean Connery there in, what's that show with Alex Trebek out there? What's the 40-year? Thank you, KJ. What's that with Alex Trebek? The Jeopardy. That was what a classic that was. We should play that some point in time during out there. In any event, we know the key levels here to be watching out here inside of the Dow. Now, also, if this level here fails, meaning this we see a price move below that seventh wave and a and a move down to close below 17,481. Then we can go take a look at the Dow itself to get a feel for where things may head to. So again, we're going to, as always, we look at both sides of the trade. You must always look at both sides of the trade. If you get so tunnel vision and you only look at one side of the trade, you will not solve the puzzle. I can guarantee you cannot solve a Rubik's Cube. And I'm not good at solving a Rubik's Cube. I'm better at solving other puzzles out there. But you cannot solve any puzzle by only taking a look at one element of it. Don't do that. Do not do that. That's right. Sweaty spheres. But what did that actually mean? In any event out here, so now we're going to go take a look at the longer-term chart, and this is of the Dow itself. And we can see here at this stage of the game what you're looking at. Now, during the first hour, if you didn't catch the first hour, go catch the archive on Channel 9 out there, because then we really focused on the S&P. Now we're switching over to the Dow, baby. And if we take a look at the Dow, those midpoints that are the dashed lines, the small dashed lines on my screen, those are the midpoints between these horizontal trading ranges. Now, in fact, I'm going to go ahead and turn them off just for the moment. We can see that price. Oftentimes they act as levels of support or resistance out here, but they don't have to. They're not as significant, but they are worth noting, that's for sure. So 17,732 was what we'll call it. Is a pretty key level to be watching tomorrow. We can watch it today, sure, but it's really tomorrow. It's about the close on Friday. Did that level hold as support? If it doesn't hold, it then opens up the door to 17,172 inside of the Dow. So that's on taking a look at the weekly chart. But let me go ahead. I'll turn that off. That way, for those of you that are watching on Tiger TV, it's going to be a little bit clearer. Of course, here's what we know about the Dow. The Dow, beautiful thing. Go back into the 2009 time frame. Take a look at the blue line out here. Take a look at that trend intact. Take a look at the trend coming off of that significant low in October of 2011. That trend absolutely still intact. So the uptrend inside of the Dow totally intact as we take a look at it. And all that price is doing is bouncing in between its horizontal trading range boundary lines out here. It has tested the bottom, broke through the bottom back in October 2014, came back, tested it in December 2015, came back and tested it in February 2015. Of course, we saw that price stalled back in March. Where did it stall? 18,291. Why does it work? How does it work? I don't have a clue. I just know that it does work. Isn't that really what it's all about? You just want to find something that works out here so that it can help you to navigate, where price is likely headed to. So again, I say on that 30-minute chart, I think that's really key level for us to be watching. And in fact, if that level gets broken, I'd say then odds favor a move down back in that 17,170 area as a level of support inside of the Dow. And that's some pretty significant support. It's been tested several weeks ever since the break above that level. I would expect that would be an area that would hold. Now, that's inside the Dow. Let's go take a look at what's going on inside of the NASDAQ composite. Let's go put that on our charts out here, $CUMPQ. So as we take a look at the NASDAQ composite, we look for those same kind of levels out here. What we'll see is the composite. We pointed this out on Monday as we took a look at these levels, that this 5,055 area is a real key level of resistance for the NASDAQ composite. It only got up to 5,042. Remember, we use these numbers here as guidelines. You can see there's been 34 points of contact up there because this data goes back to 1996. So that means that we're taking into consideration on a weekly chart, we're taking in, the 2000 time period out here. So we've gotten a number of points of, I'm sorry, there has not been 34. What the heck am I talking about? 34 points of contact. What am I smoking out here? Nothing. But by the way, these horizontal trading range boundary lines, they were all formed way down below. Look at how well they work. They were formed down at the levels of 2258 and 1908. Now, the levels on a monthly chart or weekly chart are going to be different than the levels on a weekly chart. Why is that? Because we're using the body of the candle. And a weekly chart is going to close differently than a monthly chart is going to close out here. So as we take a look at this, the key level of support inside the NASDAQ composite, the same thing. Go back to the 2009 level and take a look at the trend line. Not anywhere near it. Go back and take a look at the trend line coming off of October 2011. Not anywhere near it. This trend still is intact. Price just simply ran into resistance, a natural area of resistance up at the 5,055 level. If price continues to back on down, expect the NASDAQ composite to find support at 47.05. You're at 48.29 right now. Look, that may be the low. That may be that bottom that comes in here the early part of next week, and that might be your buyable bottom for the rest of summer. Nothing has changed with regard to my outlook as far as what it is that we should be looking for. This is Steve Rhodes. This is TFNN. We've got the Dow off 127, S&P down 14. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls. Now, Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 98 right now. S&P is down 11. Now, one of the big culprits in behind the move inside the NASDAQ composite, the biotech sector. And if we go back and take a look at its daily trading ranges, now the blue lines that are going across my screen, even though we got a weekly chart up here, these are the daily horizontal trading range boundary lines that have acted really well at identifying levels of support and or resistance. We can take a look at last week. Last week, it closed right on the resistance level, just slightly above it. The resistance level being 365. The actual close last week was 366. Hey, give me a break. Now, if we take a look at where price has fallen here this week, price is trading at 338.86 happens to be a potential level of support. Now, if we see the IBB break through that, do it with any kind of conviction, that sets up a move down to about the 313 level. But right now, you've got the IBB just simply having pulled back to a level of support. And as we took a look at the IBB on its monthly chart, of course, it's only today's March 26th. So you've got next week, Monday, Tuesday, I think closes out the month out there. We just simply have seen an inside session. No, it was BIB. It was Biogen. That's what we looked at. BIBB. That stock on the weekly basis, that says that it wants to run back up to the highs out there. And I don't know the weighting structure of Biogen inside of the IBB out here. Too many bees in life, too many bumblebees. But what I can tell you is the IBB is right down at the support level on its daily horizontal trading range boundary lines out there. Okay, enough of those. Let's go take a look at, I mentioned we would take a look at light sweet crude. I say I have a question came in here, asked me if I would look at the euro Japanese yen. So the answer is yes, I will do both. Now, if we take a look at light sweet crude, nice little key reversal day that took place back on March 18th. Those are things to be paying attention to. So that's a fairly significant potential bottoming pattern out there. We take a look at what light sweet crude has done thus far. All that it's done is it's trying to get back and at least do what it's supposed to do, which is get back up into its resistance level, this set of swing points out here between either February 3rd or February 17th. And it has gotten into, if we take a look at the February third swing point, we can see the price has moved into that level, which is priced out at 51.70. So price making its way back to the swing points. In order for a light sweet crude to really say that, hey, that key reversal is more than just a bounce and is more of a change in trend, you really need to see that 56.07 level. So 56.07, 56.08 is the high, the intersession high on February 17th. You need to see it close above that. To get it close above that, it says, hey, you may have something here. In fact, that something here, what you would do is just take a look at the move from the low, from the high to the low, which should give us a price projection. A dead cat bounce would say, if you close about 56.07, you're looking at $65, 64.98 to be exact. And that's what's going on in the case of light sweet crude. With regard to the euro, Japanese yen down 92 cents as we speak right now. If we take a look at this, there's really been no substantial damage. We've had pretty significant price damage, price erosion, overcooked, overdone, in my opinion, inside the S&P, inside the Dow, inside the composite, just enough to get people to doubt, totally to get people to doubt that we're about to make another significant bottom in the marketplace, the one that's going to go ahead and take the markets higher through the end of April, early part of May, a little bit of a pullback, and then whoosh, another run higher into the July timeframe. So to a certain extent, I'm digging it. I'm liking it because I want to have, folks that are not believers out there. It just works better. It's just really the same thing going on in gold. There's a lot of folks that don't believe that, there's much to it, much to what's going on in gold. I hearken to say that's not what the information, that's not what the signals are saying to us. So back to the euro, Japanese yen, it's moving sideways. It's moving sideways. And our market is moving down. What do you say to that? Something to think about. So not much here. There's nothing. There's no confirmation inside the euro Japanese yen with regard to what our markets are doing out there. To gold. If we go over to the gold, go take a look at Goldilocks. Made the 0.382 retracement, made the so-called dead cat bounce, doing it with some volume. We took a look at the interest spike at about 4 o'clock in the morning or so inside of Goldilocks. It had some volume in the move. It's made the 0.382 retracement. Now, this bar here that we're taking a look at, it could have been wide-ranging. It still could be wide-ranging. I don't know where gold is going to close, but right now it's sort of neutral. If we take a look at the candle, we do know is gold has made the 0.382 retracement. We know gold is broken above a descending price channel out there. It really, the message that it sends to me is we're going to see 1244 in gold. And maybe not today, maybe not tomorrow, but we are going to see it. And not just our lifetime, we're going to see it here shortly. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 85 points right now. S&P is off 9. Composite's down 34 points out there. Let's take a look. I had a request here, a couple emails. A request to take a look at some monthly charts just to get a feel for where we're at in the monthly chart basis. Now, the month doesn't end until Tuesday, so we've got about 3.5 trading sessions left. But nonetheless, let's go take a look at them. Let's look at the NASDAQ composite out here, see where we're at. Now, in the case of the NASDAQ composite, what we're looking for here are reversal signals. And as we take a look at, now we're looking at also here, let me update this. This is the Rhodes Momentum Indicator signals. And light blue is as bullish as you can get. We're still in the light blue area. In fact, that in the monthly chart, it is nothing but buyers that have control. You see these little red boxes out here? Those red boxes, they tell us that it is that there is no selling pressure whatsoever. As we're taking a look at the current monthly chart for the NASDAQ composite, guess what? Absolutely, positively, on a monthly chart, no selling pressure. If we take a look at, I can tell you one thing is for certain out here, that when markets are going down, that the first sign that they may have formed a bottom is when you see a reversal candle. It's really simple. Short of a reversal candle, the markets are just simply going to continue going in that direction. Hey, guess what? Works the same way on the way up out here. Now, monthly charts obviously have more meaning than weekly charts do, than more meaning than daily charts, and so on and so forth. As we take a look at the NASDAQ composite right now, as of what is today, the 26th of March out here, and there's no reversal signal. All that we know is that the NASDAQ composite is still trading inside its swing point from 2000. It hasn't even tested the high, 5132. We know that looking at a weekly chart, NASDAQ composite has run up to that resistance in the 505 level, the natural area of resistance. So as we speak right now, nothing here suggests anything other than the NASDAQ composite wants to not just hit 5132, it wants to take out 5132, and it wants to move up to about the 5500 level. That's your 1 to 2 A to B equals CD pattern to the upside. Then maybe that's where it starts to run into some other difficulty out there. But that is what the message of the monthly chart for the NASDAQ composite is. If we go take a look at the monthly chart for the S&P 500, it has not completed its work. And until it completes its work, it wants to run the higher price. What is that higher price level? That's at least 2350. 2350. The next A to B equals CD leg, the 1 to 1.618, takes you to 2213 out there. If we look for the same thing, if we take a look for reversal signals out here, we don't have them. In fact, what we had was we had an evening star formation. It was these three candles out here. Let me get my crosshair for you. It was the month of November, December, and January. And that says that the high out here in December should have been resistance, 209,355. Well, we saw a close above that in February out there. Now, we're back below that level, but we did see a close above that area. So we know that that has been really pierced out here. Is there a reversal signal, reversal candle that's in play right now? The answer is no. There most certainly is not. It would need quite a bit of work to do. You can also see we're in that light blue shaded area of the Rhodes Momentum trading signals out here, that indicator. And so blue skies ahead, 2213 and 2350, maybe even higher than that, inside of the S&P 500. That is its message. It is clear. It is as clear as anything with regard to what's going on when we take a look at the longer-term charts inside of these indices. It is clear as bell that the markets are trying to form their next summertime or springtime low out here. It could not get more clear, could not get more clear for me, at least. If we take a look at the Dow, if we take a look at the Dow right now, it's trading at 17,658. There are no bearish reversal signals. There's not the same type of topping pattern that occurred back in 2000 that also occurred back in 2007. That topping pattern isn't out there. We don't have any kind of bearish reversal signal. Again, the bearish reversal signal inside of the Dow, which actually formed in January, it becomes the doji high out here from December inside on a monthly basis. We saw it close above that level. We saw it close above that in February. The month of March is not over. There is no reversal signal inside of the Dow. Where's the Dow headed to next? 20,769 is its next target. That's the 1 to 1.618, A to B equals CD to the upside. So that's what's going on inside its monthly chart out there. Let's take a look at the NDX 100. I don't take a look at this too often. It potentially could be in a seventh wave to the upside. Most likely it is not. Most likely it's only in that third wave. It's going to go after its high out here. Its high being the trading session. Oh, come on, don't do that to me. I'm alive on the air out here. That high being the March 2000 level of 48.16. We're trading inside there. No bearish reversal signal. 48.16 is the next mark. We're at 43.06 inside the NDX 100 out here on a monthly basis. If we go take a look at the Russell 2000, shoot, the Russell 2000 couldn't be any clearer to us. We know that it has a target of 1350. You want to take a look at its monthly candle session out here? Of all of the stocks, of all of the charts out here, it really doesn't have anything that is bearish. Right now, it's considered a high wave candle. Just means that it's lost its way. Really not that big of a deal out here. It wants to get to that 1350 level at a minimum. The monthly is broken out of the consolidation. The weekly is broken out of the consolidation. The daily is broken out of the consolidation. The Russell 2000 is still the leader. It's out in front. And in a bullish market out here, you want to see the Russell 2000 just simply be out in front. It ain't going to lead things up. Ain't's not a good word, but it's not going to lead things on the way up. It's not going to carry everything behind it. But the message of the markets inside the Russell 2000 is it clearly wants higher price out here. No reversal signals whatsoever. If you go ahead and you take a look at the New York Stock Exchange, guess what? Same message out here. New York Stock Exchange has broken through a 6,200 point consolidation. That's at the 10,387. Now, the cool thing about that is it's come back and it's tested that level and it's rejected it. So next move, is there a bearish reversal signal inside of the New York Stock Exchange? No. Could it be in that seventh wave pattern on the way up? It could be. It could be, with regard to the high that was made last month. We haven't taken out last month's high out there. But here's the cool thing. If we don't take it out in March and then we come back and we take out that high in April, we know we can go ahead and get rid of that seventh inning stretch pattern that's out there. And that just bodes well for higher price. Now, over time, over history, over the many, many years to come, 16,500 is the level where it wants to get to. Only, and I do say only, if we see a close back below 10,387 do we start to potentially negate that level. No bearish reversal signal inside of the New York Stock Exchange. It says to me that it wants higher price as well out there. So what you ought to be doing is you ought to be looking, you ought to be searching around, you ought to be looking for those things that you want to be long for the month of April, early part of May. Sit through a little bit of agitation during May and then take it on into the summertime. Have a nice July 4th celebration because you spent time identifying those things that you wanted to be long in. And then maybe it's the energy sector, the XLE out here. If we go, so that's hopefully that answers the questions with regard to what's going on the monthly view out here. If we take a look at a daily view for the energy sector out here, we know that this thing is certainly, it looks to me like it's trying to form a bottom out here. It's really just been just trading sideways. It's got its work to do. There's no question. In its work that it has to do, it's got to be able to, oops, that didn't work real well. But basically, it's got to clear, this downdraft area from November the 28th. The $82 area is where it has resistance. In order for a true change in trend to take place, what it needs to do is needs to repair the window, and that means we need to see a close above $85.15 out there. We don't have that as we speak right now. You're trading at $77.18. But this thing came back and it tested its swing points, and it did it with lighter volume. So you talk about not being able to bust it down in the weakest sector inside of the S&P 500, arguably. And it tested the swing point, which was from January 14th, which had 52 million shares. And it tested it with what? 21 million shares on March 13th. You couldn't get any clearer with regard to its inability to go ahead and break things to the downside. So what does that set up? The markets are going to move higher into the if I'm correct in my analysis, and I believe that I am. If the markets are going to go ahead and move higher into May, into June, into July, maybe you want to look, and you're looking for dividend stocks. Maybe ExxonMobil would be a bad place to look, or Chevron, around those areas. Because at this stage here, with regard to the overall sector, energy sector out here, it's given us a message that it is truly trying to find a bottom. We haven't seen any substantial. Well, I take that back. There was a pretty substantial sign of strength, and that was on March 18th. When you come off a bottom, you like to see that. 27 million shares to the upside out there. So not too shabby for the energy sector. Now, let's go take a look at some things, individual stocks here that are moving and or grooving. Let's take a look at what's grooving to the upside out here. Let's take a look at Accenture PLC. Accenture PLC, what do they show here? They show GAAP earnings per share to be in range. I don't care about your range. Their second quarter profit rose. Okay, well, let's go take a look and see what Accenture PLC is doing. It's taken out a swing point very nicely. It's taken out the December 24th level. That had 914,000 shares. You've done 3 million today. Hey, holiday trading session, you've already taken out with 3 times the volume. That looks pretty good. That pretty good says you've got an A to B, a confirmed A to B equals CD to the upside inside Accenture PLC. Your A point, well, I'll tell you what that was in a moment. Your A point is down at 73.98, and that was on the trading session of October 15th. Your B point out here, that was on December 24th, as we mentioned. B point passed with volume. C point makes a 47% retracement on February 2nd. What Accenture wants to do is make a move to 101.43, more likely 106.32, maybe even the 112 area. But 101.43 looks like the next stop. It's traded at $94 and change out here. That is Accenture PLC at all-time highs out here, so that bodes pretty well. That looks pretty good for that equity. If we look at Red Hat out here, Red Hat is actually very green as we speak today, up nearly 7%, up $5, almost up $6, almost up $6. They were out with the numbers. Their second quarter profit is up as well. Let's go see what the stock is doing. Now, this is the daily chart. It's also taken out a swing point, 52-week or all-time high out here. Let me see. What's the monthly chart? Where's my M for monthly? Let me see. What do we got here? Red Hat, all-time highs inside of Red Hat, and I believe it was taking out a swing point with volume. Volume today, 3 million shares. It's taking out the, we'll call it the swing point no, that's Accenture. Good Lord, how does that happen? Red Hat, RHT. Come on. Jeez Louise. Okay, so GAP's up. No, not a, well, I don't know. I take that back. This may also be an all-time high out here. Give me a moment to give you the accurate, correct information. Yeah, looks like it is also all-time high out here. And, boy, this is a pretty large A to B equals C to the upside. 43 million shares taken out with 49. How about that? Look at the monthly A to B equals C inside of Red Hat. Now, I remember trading Red Hat back in the 2006, 2007 time frame. Was one of the things Red Hat and several others were the actual equities that led me to say enough of just this fundamental investing. I wanted to understand the technical tools that were out there. I wanted to understand why price would move to where it was at. I wanted to understand that piece of the puzzle. Hey, the piece of the puzzle inside Red Hat right now, it has a confirmed on a monthly basis, A to B equals CD to 97.14. It's trading at $74.24 as we speak right now. So all things look pretty darn good for Red Hat. Now today, gapping up, volume behind that move, 3.3 million shares. Also taking out another swing point with volume, the swing point from December 24th with 911,000 shares. So all things look pretty darn good inside of the case of Red Hat. RHT is the ticker symbol. I believe they changed their symbol out here. Might actually have been RH. AT. I can't recall. My memory doesn't go back to 2006 too well out here. Let's see. What else do we have going on inside the marketplace? Let's look for percentages. How about 5 below is really 5 above today, $3.50 above, about 11% out here. I think that's a retail store, is it not? 5 below. Now, it's going to have some struggles out here. So it's having a nice trading session. But what it really needs to do is just trading into a supply line. And there's a whole group of folks that came to this equity on January 9th. That whole group of folks was 10 million shares. Of course, there were a lot of sellers, but there were also the buyers. And those folks that bought at that price point in the $37 level, they weren't feeling too good about 5 below when price got down to the level of 28.51. So that's your supply line. That's your group of folks that are just saying, hey, come on back. Give me my money back here. And that's what's going on in the case of 5 below as we speak right now. Not too bad in the case of volume. 4 million shares going into 10 million shares. So really pretty good considering we've only been trading for an hour and 15 minutes. Nonetheless, 37.67 is going to be an area of resistance, your first level. And your second level is $41.80 out there. That's ticker symbol FIVI. That makes things pretty easy. You got SanDisk falling apart at the seams out here, down 17% off, $13 and change. Priceline down about $10 as we speak this morning. PCLN, let's take a quick peek at this equity. Priceline just really coming back to its breakout area. Priceline broke out. Nice volume, nice sign of strength on February the 19th. Price now trying to get back to 1129.98 and doing it with very light volume. 200,000 shares so far today versus 2.6 million on the breakout. Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 64. S&P is down 7. Composite off 27 points right now. Last week was with some friends from Switzerland. And was opportunity for me to ask, hey, so because we remember the day when the finance minister went ahead and said, hey, we're no longer going to peg our Swiss franc to the euro out there. So I said, so what was it like? Because, when we were sitting here calling the markets, taking a look at that very unusual move out here, the response was, man, it was really, now they were close to the border in Germany, not too far away. And they said, man, it was great for shopping. You should have seen all the people, that were, over the border buying all kinds of things. And I said, obviously for export purposes, that may hurt, it may sting for a bit out here. But, as, when you live there, and you're a consumer, and you're like, man, look at how strong the dollar is now, and you can just simply go right across the border and buy a bunch of things. And what I wanted to understand was, boots on the ground. What was it like over there? Just like I've got a good friend in Russia. And when the ruble started going crazy, I reached out to him to see if he would come on the show. Now, he owns a couple of businesses out there, and he just said he did not want to. He wanted to lay low. I guess you live. I remember when I visited over in St. Petersburg. It's always it was always weird when I was traveling over to Europe. You travel around the U.S. and other places. And to me, what was always weird was when you land and you get into an airport over there, and you've got guys that have like submachine guns on their shoulders out there. It's like going to Mexico City. If you've ever been to Mexico City, and I don't know if it's like that now, but years ago, you'd get there and you'd see, military guys up on rooftops near banks. It made you feel real comfortable to be walking, near or into a bank out there. I never felt that comfortable, I suppose. Now it's common day. It's common to have, police officers roaming around the halls of the airports and so forth. But it was always just kind of a weird thing. Of course, you get off a plane back then in Poland, in Russia, and you're not just looking at the guys that are calling the planes, and you got guys that are standing around with all kinds of rifles and weaponry out there. So it never made me feel real comfortable. So I understand why Steve-O did not want to necessarily come on the air and start talking about what was really going on. He said, hey, next time in the States, we'll talk for sure, but he didn't want to come on the show, which was too bad, because it would have been nice to have actually had some boots on the ground with regard to what was really going on there. But, a lot of scary stuff. In any event, with regard to these markets, I don't want you to be scared, and I especially don't want you to be scared and fearful, because we've got all these great hosts that are coming up. Right now, right in the on-deck circle, we got our man Basil Chapman. So he's ready to hit the ball out of the park. And after Basil, because it is Terrific Thursday, we've got Larry Pesavento. So he's sitting back right now. He's probably getting his early morning suntan. He's doing his laps in the pool, I'm sure, and probably just catching some early morning sun. Then on Thursdays, we'll come all the way back out here to Texas. We'll go down and do the Texas two-step with Daryl Martin. And, of course, we got our man Polar. Now, I believe that they've named there's a new ride. There's a new roller coaster that they're naming after Polar. It's a roller coaster building in Orlando. 700 feet tall or something like that, but it's actually going to run around a pole on the way down. So I think that David might want to take a look at copyrighting that Polar name out there. Of course, we've got on Thursdays, we then go to Tom O'Brien and, of course, Andy Heck to go ahead and take us home. So, folks, have a great Thursday. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.
Ooh, you come on like a dream, peaches and cream, lips like strawberry wine. You're 16, you're beautiful, and you're mine. You're all ribbons and curls. Oh, what a girl. Eyes that twinkle and shine. You're 16. You're beautiful.